Welcome back. You've been watching Crystal Ball. I've been in conversation with Ramesh Damani. What themes are you betting on, Ramesh, right now? Because, you know, the consumption theme the last couple of years has not been very strong. Of course, there are reasons for it. But you look at the performance of not all, but many of the consumer-based companies, valuations aside, they've not been rockets. When do you think this starts kick-starting once again?
No, you're right, but I'll tell you the couple of themes. For the consumer FMCG group, a good monsoon will act like a good tonic. That's, you know, self-explanatory. But I'll tell you one thing, two themes that I feel might interest investors over the next period of time. One, of course, you look at the OMC basket, if you will. What has happened is that Indian petroleum growth is climbing every month. India is now the swing buyer of petroleum and petroleum products the world over. So it's become the third largest, user of oil, if you will, in the world. These companies are now deregulated, so they have a modicum of pricing power. Subsidies, except for some kerosene and all, is pretty much vanished. They're earning what I believe are record profits, and they're paying out 35% in payout ratios. And yet the market is treating this as one-time income, treating this at very low P's. So I think as markets begin to realize that these could potentially be cash flow machines over the next 4 or 5 years, stable, rising cash flows, good dividends payouts, very little equity dilution going on, I think markets could re-rate the stocks. So I would say to investors who are looking for some safety and some appreciation with a stable dividend payout, the OMC sector looks very good to me. The other sector that I've been particularly more interested in the last couple of years, Udayan, was, since 90, we are all children of Infosys in many ways. We came to our teeth came to the market in the early 90s when Infosys went public, and a lot of us rode the Indian technology boom. But almost since the 90s, a lot of us have been looking for companies that divorced itself from the Go West, dollar-denominated services model that Infosys pioneered so successfully, and helped build the companies in India. You want to look for product companies, focus on Indian consumers, with a more diversified revenue stream. And increasingly, I'm finding whether it's in identification, whether it's in banking, whether it's in insurance, or whether it's in antivirus software, there are Indian companies focusing on the Indian market and making a run of it for the business environment and doing well. So if you're asking me for two new sectors, we always like the old sectors of IT, pharma, tech, whatever have you, FMCG. But two new sectors, I would suggest that the OMCs on a risk-reward ratio are not properly priced. And I would say look for India-focused product companies that are addressing a critical need and have a particular amount of USP.
OMCs are easy, Ramesh, but on this latter, I would request you to give us some examples with the disclosures. I believe that you own a company called HCL Infosystems. Is that the typical India-based product company kind of a profile that you're referring to?
It is one of many. Unfortunately, Udayan, the new SEBI regulations are so draconian that I can't, refer to specific names or recommend them. But, in terms of a broad basket of the companies, there was a company that recently listed that, attacks the antivirus security software. Now, if you look at the environment for mobile computing, cloud computing, Internet of Things, regular laptop use, someone rightly pointed out that the Second World War was fought with conventional weapons and the Third World War might be fought with nuclear weapons. But increasingly countries as disparate as Iran, China, are launching malware, launching virus-based software attacks on institutions, corporates, stealing IDs. So any company that helps you in protecting your database, protecting your confidentiality, I think will tend to do well. I think the endpoints, whether it happens to be laptops, PCs, mobile phones, Internet of Things, Internet of Industries, they all need protection. So if you can find companies that address this, and there are 3 or 4 companies that are working towards this issue, and they're not your typical Infosys, Wipro, TCS, selling to the West, dollar-operated services revenue. They're actually making innovative products that are being sold on the street under the brand names. I think those are good places to begin to look at.
Speaking of oil sensitives, I mean, you referred to the oil marketing companies, but we had a big run in aviation a while back. But then somehow Indigo, which I think you owned in the IPO, seems to have lost its way a little bit. Are you still bullish on aviation?
I am actually quite bullish, Udayan, but I'm extraordinarily afraid of what has developed over the last few weeks in, with Egypt Air. Yeah, there are two possibilities. It could be a technical snag, in which case, of course, all aviation stocks will recover very quickly. But if it was a terrorist attack and no terrorist has claimed responsibility for it, we have to ask the question why. Is it because they're planning other attacks, God forbid? Or is it because there's some failure that nobody knows anything about? So we'll have to see how that plays out. If the Egypt Air flight was brought down, God forbid, with a terrorist attack, I think the outlook for global aviation stocks would be extremely poor.
How about financials, Ramesh? I mean, I know you've not been a big fan of bank stocks in the past, barring a few, but how about NBFCs? We've had a couple of listings from the microfinance space. Housing generally has been a good space, but the large company HDFC disappointed a bit this time. Is that a space which excites you, the non-banking finance space?
I mean, it's a space the market has been paying a lot of attention to, but I pretty much, have not looked at some of the new listings. I mean, a lot of them are going to the microfinance area, and my problem with the microfinance area is that first, you're borrowing money from the regular bankers and selling it at a higher rate, which of course doesn't make sense as a business model to me. If you see the peer-to-peer lending platforms in America, they've all been now under pressure. And secondly, what microfinance assumes is that every person that you lend money to is an entrepreneur, that he can go out and give you a return on capital. So there will be a very low amount of non-performing debts. You know, my personal sense, and I could be completely wrong, that this is better left in the NGO sector, in the social sector, rather than the stock market. The idea that every entrepreneur can take money and return it back at a higher rate of interest doesn't make imminent sense to me.
Okay. How about playing the cyclical recovery in India? So far the signs are mixed. Sometimes we get good data, sometimes we don't get good data. But this quarter, cement after a long time has shown some sparks. Would you bet on something like that, which is so deeply cyclical, which has been out of fashion for some time, it's only started participating now? Because cement tends to move in 3-4 year cycles. Could we be at the start of one?
I mean, logic would suggest that the volumes will grow exponentially, particularly because you're seeing huge amount of spend coming on a freight corridor, coming on, so many road construction, which requires cement. But again, Udayan, as you know from my discussions with you so many times in the past, that I'm not, a big one for the, cyclical companies, cement companies. I mean, you have your circles of competence, and that clearly is not mine. But the point I want to make here is that to investors who feel that, well, the so-called Modi promise, for 2 years it hasn't been delivered because the indexes have been flat. In fact, in dollar terms, it might even be negative. I think, I'm missing, if you look back, you're looking at the tile, but if you step back, you're seeing a whole mosaic unfold in front of you. And I think the structural reforms that the government is putting in place now, if we can actually win the battle of corruption, not forget win, even make a dent in the battle of corruption, I think that's a huge plus for the market, and I actually see that happening for the first time. This Make in India initiative, particularly if we get someone with a brand name from Apple to come and make phones in India, I think that'll be a huge win. They got Obama here, maybe they can get Apple here. The Swachh Bharat, which is now being launched after the cess has been taken. I mean, we're all used to living in, private cleanliness but public squalor. If the government can deliver even on these 3 major mandates and, then go about their business of better governance, I think it lays the foundation for a great bull market. In a great bull market, of course, all stocks will do well. It's not that particularly, a sector will do well. A broad-based bull market will lift GDP above 8.5%, and all boats will float. So my particular insight is that it's as good a time as any to remain invested in India. The caveat's always the same: buy high-quality businesses that even in a volatile market, a Brexit, a Fed rate increase, a poor monsoon, will be able to hold their values. So that's the mantra I'm still speaking within.
Point taken, but What's your best guess, Ramesh, on when the market rediscovers some serious traction on the way up? As you said, a couple of years of pedestrian performance. The domestic money is invested in the market now, much more than it has been in past years. But do you think this market takes out the 9,100 top sometime in the next 12 months or so, or before?
It's around the corner, Udian. The green shoots are there. The market has consolidated, for a large period of time. And, we can see recovery ahead in, say, the oil marketing companies and the airline stocks. A lot of recovery that we can almost see the process unfolding before our eyes. I think this quarter, hasn't been the best, at least in terms of the stocks that I follow. But, broadly, investors, analysts have been encouraged by the quarter. So, while I can't predict for certainty that the index will cross 9,000 or not, I can tell you the undertone is good. Let me give you another example. The S&P 500 for 1 year has been underwater now. It peaked almost a year ago, almost to the date. But the advanced decline line of the S&P made a new high last week. So it suggests that global liquidity is strong, that leadership is still strong in global markets. And I think there'll be a return to form in India, with domestic investors having been burnt a little bit by Jan-Feb fall. Now see the index go higher coming back, foreign investors coming back to India, and the long-term reform process that we've started. Now investors being able to see that. I mean, for the first 2 years, even I was a skeptic. I couldn't see the reform process. But now as I step back, I can see there's a master plan, and there's someone in New Delhi guiding this master plan. So I am enthused, and I would recommend a full-on exposure to equity at this point. I think investors will have to realize that real estate is not going to deliver returns to you. Gold is at best a safety valve for you, and commodity, the bull market in commodities is over for some time to come. So equities, with its tax-free nature of long-term capital gains, tax-free nature of dividends, better tax regulatory authorities, offer almost the best place for Indian investors to park their savings.
Ramesh, always a pleasure talking to you. Thank you very much for your time today.
Thanks, Udian.